Welcome to SBA University lesson number 8, business acquisitions that come with commercial real estate. As an SBA lender, you know what I love? Business acquisitions. You know what I love even more? Business acquisitions when it comes with commercial real estate. On this lesson, we're going to focus on the 5 things that you should know how having commercial real estate as part of the transaction can benefit your SBA loan. The first thing to know, and the most important in my opinion, is how it impacts the term. When the commercial real estate makes up at least 51% of the transaction, we can actually stretch that term out over 25 years. So think about that. A business acquisition by itself, no real estate, 10-year term. Business acquisition plus the commercial real estate, when commercial real estate is the majority of the transaction, up to 25 years, fully amortized, and only a 3-year prepayment penalty. So think about that. That 10-year term, when it's a business acquisition without real estate, plus the rent expense, versus a 25-year term, where now you get to combine the acquisition and the real estate, ends up being probably a similar price. So always think about buying the real estate if it's an option. Another thing to keep in mind with that term, it's a weighted average. It just depends on how much of the transaction is the real estate versus the acquisition. If the acquisition is more, there's usually a calculation done to see. It can be 12 years, 17 years, 18 years. Just think the higher the real estate portion of the transaction is, the longer the term. The second thing to keep in mind is the equity injection, right? Obviously, if you're buying a business for $1 million and that's the whole transaction, 10% total project cost, you're looking around $100,000. When you build in the real estate, let's say that's another $1 million, obviously that 10% equity injection is going to double. So you might have to bring in over $200,000. It's good to understand your budget when you're looking at acquisition, and then also acquisition with real estate. The need for more money up front will go up with the addition of the commercial real estate. So always keep in mind your budget when looking at these things. Now let's talk about how it impacts cash flow, because you got to think about it. Because we're able to stretch the whole term out 25 years, normally that's going to impact the annual debt service, potentially versus a 10-year term, it could be fairly comparable. But then on top of that, you've got add backs, right? Now that rent expense on the business can be added back. So when you're looking to buy the business with the real estate, when you're reviewing the financials, go straight to the rent expense line. See if that business has been paying a rent, because that's going to be added back for the purpose of cash flow. Also ask questions. Have there been any building repairs done recently? A new roof, potentially a build out that's been done. Any potential one-time expenses related to that property can be considered an add back as well. So do your due diligence on the property and see if there's been any improvements done recently. And then of course, consult your CPA or accountant about the potential tax benefits to owning the real estate versus renting as well. So all these things can help impact cash flow to the positives, which is a great thing with these SBA 7A loans. And speaking of the property, one of the most important things you can do is do a walkthrough. Look at the condition of it. You're going to essentially have to take over that property. One of the benefits of this loan program is we can actually build in some leasehold improvements. So if you think there's some improvements that need to be done post-closing, let us know. We could potentially build that into the loan. And again, it all goes towards stretching it out to that longest amortization possible. If there's cash flow to support those improvements, we can build that in. That way you're buying a piece of property and then able to fix it up to your spec right after closing. The 5th thing to keep in mind is just the additional due diligence when you build in the real estate into the transaction. So think property appraisal and think about a potential phase 1, which you're actually going to go in and take some ground samples just to make sure that it's a clean property, clear of any contaminants. Obviously, you're buying a property that has any underground storage tanks, stores any chemicals. These are going to be really important due diligence items to do. The last thing you want to do is buy a property that's sitting on contaminated soil that becomes your issue after the sale. So to sum it up, think about all the benefits of buying a business that comes with the commercial real estate. Being able to combine it all into one loan, potentially stretch it over 25 years, being able to impact positively on cash flow with add backs, making sure that the property is in good shape, potentially adding in some leasehold improvements into the loan, and then ultimately completing the due diligence needed to make sure you're getting a nice, clean property that will benefit the business for years to come. I hope you found this lesson helpful. Until next time, class dismissed. Thank you for watching this episode of SBA University. Hopefully you found this episode helpful. If you need to get a hold of me directly, I'll leave my email address down in the description. Be on the lookout as I will be releasing new lessons every week to help you in your SBA journey. Thanks.